Hey, Bernardo Wealth Extended Family. Hope you're doing great. Wanted to get in touch today, talk a little bit about what's going on in the news and in the markets as it relates to that. So, obviously, the debt ceiling is on everyone's mind. You can't turn on the news or open a web browser without seeing or hearing something about what's going on, no matter what side of the aisle you tend to be on. Our perspective here is that something is going to get done. It's historically, as you'll see in the body of this email, historically, that's been the case ever since they kind of created this debt ceiling limit. A lot of this political posturing is just what it is. We're kind of calling it a crazy game of poker, right? Is back and forth. What do the Democrats want? What do the Republicans want? Obviously, there hasn't been a whole lot of collaboration or coming together at this point, but I don't think either party has any interest in seeing this thing not be resolved. So, what does that look like? The old saying of settling on the steps of the courthouse. I think that's the reality. Janet Yellen has been kind of vocal, saying she thinks this date's in early June that we hit this ceiling because it's not the debt's constantly moving around, and so, what our perspective tends to be is that as we get closer and closer, you will see a temporary deal be done to basically have some agreed upon terms, but that with a secondary agreement or actually the package to be agreed on, after that. In either case, right, what can we expect now till then? Probably volatility, right? One day, lawmakers are saying we think this is getting by. The next day, things are, really slowing down. And you're seeing just the market move with that, with the uncertainty. We've talked about that quite a bit. Market does not like uncertainty. It can't plan and prepare for what it thinks is going to happen. So again, I don't know that there's anything we really need to do other than wait this out, and we are confident that there will be a resolution that basically solves the problem in the short term, and then hopefully, it's well not hopefully, but likely they'll kick the can down the road and push the next kind of debt ceiling piece into the next or past this presidential election. So that's our thoughts on the debt ceiling side of things. How about the rest of the market? Rest of the markets, I would say, in my opinion, are kind of tell me something I don't know. We've talked about this before. The market is really anticipating what's to come 6, 8, 12 months out to the future. And so today, what do we have here? Well, we have companies reporting earnings, and everyone's kind of guiding down. Earnings have slowed. Companies are healthy, but they're saying, "Hey, we don't see as much growth on the horizon as we have in the last couple of years," right? And again, tell us something we don't know. The market 6, 8, 12 months ago, as we started to look at inflation and hear about interest rates are going to move up because we have to slow down economic growth to get inflation at bay or in check. Well, that leads to exactly where we are today, which to me isn't a surprise to anyone, right? And the markets have been resilient. The S&P 500 is holding itself up here, and as we get news, yeah, we're seeing volatility, but we haven't seen real meaningful drawdowns in the market. So I think that's a sign of resilience, and I think what the market is looking for is a few key points. First of all, what's going to happen with interest rates and inflation, right? I do think in June we see a Fed pause, meaning not raising rates and just kind of saying, hey, we're seeing the general trend of inflation improve, albeit a little bit slow, but we don't feel like we need to press on the gas again and raise by a quarter point, right? I do think we might see one more raise out into the future. We just spent some time with Carlyle Investment Group, a big alternative asset manager. Actually, the Fed chairman Powell used to work there, and their perspective to us was simple. They're like, when Powell says he's going to do something, he's going to follow through and do it. And he said we want core inflation back to 2%, and that's when we'll start to ease on the interest rate side of things. We're nowhere near 2%. Their perspective is plateau of interest rates, which I tend to agree with. I think the tightening cycle of raising interest rates is behind us to kind of that big jump, and now it's just a matter of letting that do what it's supposed to, which is slow down growth. So speaking of slow down growth, where does that lead us from a market perspective? Well, we're back to where we said, a year ago. Can the Fed give us a soft landing, or do we fall into recession, right? Soft landing is where, we slow down growth, but we land the plane, right? We don't end up, kind of crashing the plane. So I think one of those two scenarios is a high probability, but I don't see it being any kind of long drawn out time in the marketplace. I think if we do have a recession, it'll be relatively shallow. And I do think a lot of this is kind of priced into this market. So that's our general take on what we see out in the future. In terms of how we're investing, we're still focused and pushing large cap US, the biggest and strongest companies in the US, and that's where our focus is, right? We're also have a focus on cash flow, right? Dividend paying stocks. Let's get paid to wait out this market if that's what we have to do. In fact, and we don't get any kind of meaningful appreciation. Let's get paid to wait and create cash flow. So again, as I always say here, we've planned for this. This isn't something new. This isn't something different. We go through our planning process to get through to build asset allocation and risk so that when times like this come, yeah, we're going to make some tweaks and move. But ultimately, we build portfolios to last, to do well in good markets and maintain, hopefully, themselves when markets are choppy. So that's what's on our mind right now. As always, we're here for you. Please reach out. Questions, concerns. Our number one goal is that you feel comfortable in the situation that we're in, and obviously, right now, it's somewhat of an uncomfortable situation depending on your perspective. So we appreciate the confidence in our team and look forward to talking to you soon. Take care.